There's a bunch of variables. So the combination of ongoing fiscal dominance is pretty good for Bitcoin. Anything that could reduce liquidity, so tariffs, a dollar spike, that's around the margins, negative for Bitcoin. So I would expect probably some of those events happen this year. They're probably not sustained for very long. Kind of negative liquidity is not really, it's hard to sustain for long periods of time given how levered the system is. The policy mix is probably neutral to bullish for Bitcoin. And then when I look at certain on-chain things, like really basic stuff like market value relative to cost basis, or the HODL wave, like what percentage of coins haven't moved in a year and how many of them sold into the bull market, because bull markets are characterized by the market value getting way ahead of the cost basis, and are characterized by some of the older coins that are up 5, 10, 20x selling into the new buyers.
Lyn Alden begins by looking at how important the money supply and liquidity are in determining market patterns. She notes that changes in the price of Bitcoin are directly impacted by global liquidity circumstances, central bank policies, and fiscal deficits. Alden points out that long-term structural factors, including ongoing deficit spending and monetary expansion, continue to favor Bitcoin and other hard assets, even though short-term volatility may result from external shocks like inflation, rising interest rates, or economic slowdowns. In light of this, she remains optimistic about Bitcoin for the upcoming 12 to 24 months, even though there may be short-term volatility. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
Okay, let's get on to Bitcoin. So we've covered a lot there. Very broad question. What do you think all of that means for Bitcoin in the next 12 months?
There's a bunch of variables. So the combination of ongoing fiscal dominance is pretty good for Bitcoin. Tariffs or anything that could reduce liquidity, so tariffs, a dollar spike, that's around the margins, negative for Bitcoin. So I would expect probably some of those events happen this year. They're probably not sustained for very long. Kind of negative liquidity is not really, it's hard to sustain for long periods of time given how levered the system is. The policy mix is probably neutral to bullish for Bitcoin. And then when I look at certain on-chain things, like really basic stuff like market value relative to cost basis, or the HODL wave, like what percentage of coins haven't moved in a year and how many of them sold into the bull market, because bull markets are characterized by the market value getting way ahead of the cost basis, and are characterized by some of the older coins that are up 5, 10, 20x selling into the new buyers. So I look at those types of indicators to see, are we stretched here? And both of those still look kind of mid-cycle. Now, cycle structure could change, so there's no guarantee, but most signs to me still point up. 12 months, anything can happen, but if I say 12, 18, 24 months, I'm still pretty bullish on Bitcoin at these levels. As numbers get bigger, it takes more and more to move the needle.
Yeah.
But the upside of that is it's a more liquid network. So Bitcoin in 2025 is more liquid than Bitcoin in 2017. And I think a lot of that money is pretty sticky. So I would generally expect, drawdowns to be controlled. But then upside, if you shoot upward really quickly, you do get a lot of selling pressure from older holders, like people that have been holding longer and that are up significantly, either rebalancing or upgrading their house, like they're, the quote unquote buying the Lambo. You do see some of that cycle. So I think it is healthier not to go straight up and to kind of go over time. So it could certainly prolong the cycle in exchange for, less in any given 6-month period of going vertical. I think you could get a super cycle in time, but it probably would come at the expense of magnitude in any given unit of time. So I certainly think I would give some credence to the idea that market structure could change and future cycles might not look the same shape as prior cycles. But if we define a super cycle as just up only and explosive, I would generally be disinclined to expect that, because the problem is that any sort of strong upward move attracts leverage and attracts euphoria, and that's what causes some of those major pullbacks. And if it gets excessive enough, that's what can cause a multi-year pullback. So to the extent that you prolong having a multi-year pullback, it's partially probably because you never got super euphoric or leverage to begin with. It was probably meant that the price action was good but not stellar. So that really long gold bull market was a bigger market and moving at a level that was significant, but not like what Bitcoin can do in a year. So you could have a cycle like that, but you also get the downside to the cycle like that, which is that you get more gold-like moves. Right now, like I mentioned, those on-chain indicators are not euphoric. So if we said, okay, if we're going to have a drawdown from here, I would expect it not to be huge because the highs aren't as kind of overstretched. Now, if we get something crazy like, sovereign FOMO and we hit all those same, extreme sentiment, then maybe we do get another 80% drawdown. So I'd have to answer that based on indicators at the time. But on average, I expect that as cycles get bigger, they probably get less explosive to the downside and the upside because there's more liquidity, more spread out. There's less ability for one actor to kind of mess up the whole thing, unless you're like a sovereign entity, like a massive sovereign entity. So like that kind of smooths things out a little bit as my base case.
According to Lyn Alden, as Bitcoin develops, its market cycles could not exhibit the same sharp trends as in the past. Future cycles might be more stable than the past ones, which were characterized by sharp crashes after quick bull runs. This is because the power of individual traders and leveraged positions is diminished by Bitcoin's increasing liquidity and broader acceptance. Alden does concede, though, that unforeseen circumstances, such as sovereign FOMO, in which countries begin purchasing Bitcoin in large quantities, may cause abrupt price rises that are followed by required corrections. In order to determine whether Bitcoin may be overheating, she stresses the significance of monitoring sentiment indicators and real-time on-chain data. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Don't think many people are going to have the stones that Michael Saylor does in a bear market.
I think, yes, some of them might not have the stones. Some of them might not structure their debt as well as MicroStrategy structured it. So they even if they have the stones, they might just not have the choice. In addition, kind of like how in the prior cycle, when GBTC's premium went away, that kind of marked the top, roughly. After that was early 2020, it started chopping kind of sideways for a while. So that didn't blow things up right away, but it just kind of it took away this kind of arbitrage demand for Bitcoin. And you could see a similar thing, which is right now MicroStrategy is a huge buyer. They have a premium, so they're going to keep buying. And eventually, if they exhaust their market for a cycle, so it might not be permanently. They previously exhausted their market. Now it's obviously a lot more demand, but they could for a period of time exhaust their market. Through no fault of their own, just the market only is so big, and then they go back to not buying anymore because they don't have a premium that allows them to keep issuing securities, and then you could remove that marginal buying source and then enter kind of a longer bear market. Maybe it's not explosive to the downside, but that can trigger kind of weakness, and if there are over-levered entities out there, that's how they can kind of send it down. So we have to kind of see what the market looks like in late 2025 or mid 2026. We can have this discussion again and see, okay, by metrics, how euphoric does this look? Right now, I think the industry is pretty healthy. No major signs of euphoria. Occasionally, you get little brief periods of slight euphoria, but nothing that looks kind of like a multi-year drawdown to me. So, and I think that'd be healthier to see a little bit less boom bust and a little bit more grinding higher over years would be ideal. I don't know if we'll get that, but I think that's ideal.
At what kind of premium would you start thinking, okay, that might be getting a little too overheated?
2.5 to 3x premium or higher. And I say that in practice because I've been long MicroStrategy in my portfolios publicly since August 2020 when they initiated the strategy.
You've done well.
And well, I haven't done it as big of a size as I've done Bitcoin, so I could have done it well if I was bigger in size in MicroStrategy, but I prefer lower leverage. But what I generally do is I trim it when it gets euphoric, because that slice becomes a very big percentage of portfolio, and then I have new people that follow my work, and I don't want them buying in super high MicroStrategy at that time. So I rebalance back down to kind of a target level, and I generally do that historically when we're at roughly 3x NAV or 2.5 times NAV, and all of Twitter's talking about MicroStrategy. That's when I've publicly have trimmed some, and there's no real upper limit to what I can touch briefly, but basically it's self-correcting because the higher it is, naturally the more aggressive they're going to issue securities to buy Bitcoin and recalibrate that. So if anything, when I see a positive premium on MicroStrategy, it makes me bullish on Bitcoin because it means they're going to go out and buy a lot more Bitcoin. But when I see a very high premium, I get a little cautious of the MicroStrategy to Bitcoin, performance going forward for a period of time. It's possible. I did not completely get rid of it last cycle. I just trimmed it when had that crazy run in like the late 2020, early 2021.
Yeah.
So I rebalanced. Unless something changes, I don't perceive doing that. I think the company's well managed. Not just the chairman, but also their treasurer, their CEO, other people there. I think they're well managed. And so unless something structurally changes my thesis, I'll probably remain long. But you can remain long at lower levels if you say, okay, this is getting euphoric, I want to dial back. I'd rather just hold unlevered Bitcoin. So the way that I kind of do it is, I never sell like actual Bitcoin, but in a portfolio where there's ETFs or MicroStrategy, I will dial things around based on not having the entire portfolio turn into Bitcoin, especially because a lot of people, from TradFi kind of monitor those portfolios and might consider investing in those portfolios. So I have a little bit more like a lower volatility kind of benchmark that I target.
Lyn Alden talks about how market cycles work and how institutions are using Bitcoin, particularly through firms like MicroStrategy. She points out that although some organizations could find it difficult to maintain significant Bitcoin acquisitions, MicroStrategy's capacity to do so depends on the price they get in the marketplace. They can keep buying additional Bitcoin as long as their premium is high. They might, however, cut back on their purchases if that premium declines, which might cause a brief period of market weakness, though not necessarily a significant one. According to Alden, if major institutional purchasers such as MicroStrategy reduce their purchases and overleveraged market participants intensify the downward pressure, a protracted bear market could occur. Alden highlights that there are now no significant indications of exuberant emotion controlling the market, indicating that Bitcoin's general health is still healthy. Instead of being characterized by sharp cycles of boom and bust, she supports a more stable and sustainable commercial environment. In order to prevent taking on excessive risk, she also discusses how she manages her MicroStrategy investments, adjusting her position when it becomes exuberant. Her strategy focuses on keeping her portfolio balanced and in line with her long-term investing plan while preserving exposure to Bitcoin through less volatile vehicles. Alden's observations focus on keeping a cautious yet hopeful view on Bitcoin's future. Her emphasis on consistent growth and steering clear of excessive speculation is indicative of a larger concept of responsible investment, which counsels viewers to remain knowledgeable and watchful as the market develops. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.